Welcome back to Zen and the Art of Real Estate Investing. I'm Jonathan Green, as you know, and I really appreciate you listening. We've made it to 12 episodes, and this one you're just stuck with me. But this is a good one. I've perfected these strategies over the years, and some of these strategies are going to help you take your off-market acquisition game to the next level. This is a masterclass in off-market seller dialogues. I'm going to talk about 6 different off-market opportunities and how you can approach them. This could be via postcard. It could be via text. Cough, cough. Please don't do that right away. Don't cold text people. Cold calling is not the greatest. But if you build the right lists, it's not as cold of a call. But I'm also going to tell you your one-to-one dialogue in person when you meet these sellers, what you're looking for and what you should be doing to make sure that you're having the maximum impact and that you're building relationships that will last, because all sellers don't want to sell to you the same day that you walk into the house. And if that's what you're after, it's going to be a slow ride as an investor. You'd have to have a lot of money to do that scale, to just be basically in a shooting gallery where you have so many appointments, enough will take the cake. But I don't like to do that because I don't like to waste my time. So these 6 opportunities for off market are going to show you why you can't send the same postcard every single time. What we see in the off market acquisition world a lot is just the same postcard. Hey, I'll buy your house quick for cash. Same as what you'd see on a bandit sign. It's boring. Does it work if you have the scale to over market? Sure, you'll get a bunch of calls. A lot of those appointments are going to suck, and I don't like sucky appointments. So let's do this. Again, before we get started, though, if you are a fan of the podcast, I would just ask you as a favor, subscribe to it, send it to your friends, leave us a 5-star review wherever you listen to podcasts. That helps us scale up the podcast as we go, get better guests on, and bring in great topics for you to learn the mindful approach to real estate investing. All right. Number 1 on my off-market acquisition list, and my favorite letter, I call the concerned citizen letter. This could be a postcard. It could be a letter. It works in tandem with whatever kind of outreach that you're doing. I like it using the postcards. If you use a company like Deal Machine, they can immediately take the photo that you take, put it onto the postcard, mail it out. I've done that before, and I think I really enjoy the way that works. So let's talk about the concerned citizen letter. This is specifically for out-of-state property owners on properties that you are walking by. So it is predicated on the fact that you need to walk by the property, and you need to be able to walk by the property for the next 6 months. I'm going to tell you why. And they need to be out of state to produce the maximum impact for you. So when you've done a deep dive on the neighborhood and you know a set of 5 blocks where you know all the out-of-state owners, say there's 5 or 6 out-of-state owners, you're going to walk by, you're going to take a photo of that property, and you're going to skip trace the information so you have the information for the seller, whether that be a text or a postcard or letter or a phone call. But I'm telling you that it works best via text or letter or postcard. This is why. You're going to send that picture to the out-of-state owner, and here's the dialogue that you're going to use if you're not in a one-to-one phone conversation. And honestly, you could use this in the one-to-one phone conversation as well. Hey, Bob, my name is Jonathan Green of Streamline Properties. I just wanted to let you know I was walking by your property at 123 Main Street, and I noticed that it's kind of in disrepair. I looked you up because I am a local real estate investor. I saw you're out of state, and I just wanted to let you know that I'm happy to walk by the property every month, give you just a photo to show you what it looks like in case it's deteriorating. I would love it for my out-of-state properties if someone did that for me. So I'm happy to do it. And I just wanted to tell you, like, it actually looks pretty bad, and I wasn't sure that you knew. So here's the photo. Here's my number. P.S. I'm a local real estate investor. As I said, if you're ever looking to offload this property because you don't want to have a property in another state, I'm happy to have a discussion with you about that. Come up with a win-win agreement where we're both happy. Thanks. What do you think? Do you think that's better for that out-of-state owner than, hey, I'll buy your house for cash? Maybe you will get more responses to I will buy your house for cash, but they're going to want more cash than you want to give them. in almost all scenarios, especially in the last 2 years. So the concerned citizen letter is just that. Hey, I'm concerned about your property. It doesn't look good. I know you don't live here, so I just want to be your point of contact. And I mean, this isn't even BS. This is something I would do. I don't mind if I'm walking for dollars and looking through neighborhoods and I walk by the same house every 6 months. I'm happy to send a photo to somebody who's also a fellow out-of-state real estate investor. I feel like that's just a nice thing to do. Do I want to acquire the property? I mean, probably. If it's at the right price. Because I'm licensed, might I get a listing also? Yeah, sure. I mean, I'm not immune to doing business, but I'm not doing it under the guise of I'm trying to steal the property from you, which I believe is the kind of reaction to I'll buy your house quick for cash. I mean, come on, 99% of the people who send I want to buy your house quick for cash don't even have cash. They're using hard money or private money or some other form of money that's not cash in the bank of their own, or they're wholesalers and they're using, they're going to sign the contract. So let's just be honest about what's really going on out there, because this is the mindful approach to real estate. That means let's hit the true items that go on in this world. So that's the concerned citizen letter. Sometimes you're going to need to follow up with those people every month. And if you go down that route, you have to send the photo on the same day every month. That's just the way that you do business. You want them to have an expectation that on the first of the month, they're going to get that update photo so they can check in on their tenants. And eventually, if the property keeps getting worse, you're going to be looking at a potential deal. Again, you can't send it and make the property worse than it is. Maybe it's in good shape and you said, hey, I just wanted to give you an exterior update. This is what it looks like on the exterior. If there's anything, I can help you with. I have local providers here as well. I don't know, since this is the only property you own in the state, I looked it up. And I don't think that's creepy. Look, I have access to data. If I look things up, it just makes me a better investor. Number 2, this is an interesting one. I call it the I want to be just like you letter. This is a letter that you would send as a brand new real estate investor to other local real estate investors who own 3 or more properties. Are you getting it? I want to be just like you. You actually have to believe this, though. So if you're a brand new investor, you're going to write a handwritten letter. You're going to do some deep dive on data and see what investors in your town own more than 3 properties. Once you see someone who looks like an LLC or it looks like a name you've seen before, you're just going to run them in the tax records, see what you can get. Once you see someone who owns 6, 7, 8, 10 properties in one area or more, you're going to send this letter. I want to be just like you. Here's how it goes. Dear Bob Smith, I was looking through the tax records as a new real estate investor and I came across you. I see that you own up to 10 properties just in Anytown, USA. I want to be honest. I actually want to be like you when I get older. I'm just starting as a real estate investor and I'd love some advice on how you went from 0 to 10 units or more. If there's ever a chance that we could get together, I'd love to. If not, I'm happy to walk by any of your properties at any time. If you're not around or you're busy handling bigger jobs, just let me know if I can be of help in any way. Again, when I get older, I'd love to have 10 doors in my town. That's what attracted me to these properties and to writing this letter. Then you're just going to leave your information there. That one might take a while, but the thing about real estate investors is they love to talk about themselves. I mean, we all do. Again, just hit that honesty there. And having someone who's not asking for something, they're not saying hey, can you mentor me? Don't put that in there. You just want to say hey, is there any tidbits of advice you could give me? If you can get them on a text sometime, that will help. Then your next course of action is, hey, is it okay if if they're doing flips, you want to swing by a job just if you can see, or if they're a landlord, you say, hey, if you're ever doing a property checkup, if there's any way I could just come by, I'd love to see how that works. That's a great way to build relationships with more experienced investors. You may find them at local meetups, but if someone has 10 properties, they're not usually going to be at the local meetups. So it's a great way of doing data dives and figuring out how to make more connections with people that have done more business than you, which is how you scale up your mastermind status. So number 1 was concerned citizen letter. Number 2 is the I want to be just like you letter. Number 3 is the neighborhood investor letter. This one's a little bit similar to the last one, but this one is for people who have lived there for a long time. Not the same as the one following this, but this is about I live in this neighborhood, you own a property in this neighborhood, but don't live there. This is for investors. I'm a neighborhood investor. I see you own 1 property here. I'd like to make my first investment happen inside my own neighborhood. I've been targeting these properties based on a list, seeing who owns them the longest. I see you've owned this one for a long time, but it's rented out. If you were ever interested in getting rid of this property or selling it at a fair price, I would really be excited to have that conversation. Thanks, end letter. This one's not that complicated, and you can use it in a variety of different ways, but I call it the neighborhood investor letter because it's basically like you want to be doing this on like the 10 blocks that you're closest to. So you can say, I live at 123 Main Street. I'm only 2 blocks over. So when I'm walking, I'm always looking in this neighborhood for properties. Being a smart new investor, I know how to skip trace. I looked up the information, saw who was not living in the properties, and those are the ones that I reached out to. So sorry if I'm bothering you, but I'm just looking forward to making my first investment, a neighborhood property. That's number 3. You just have to think back to what the intent is. On some of the big companies, they're just going to spam out marketing. And if you have the budget, that does work. But I can tell you from experience, when I'm sending those type of postcards, I do get way more appointments, but I get way more bad appointments. And I hate bad appointments. So these are more nurturing mechanisms. And the way that I do business in off market is nurturing. I'll nurture leads for 6 months, a year. As everybody knows who's been in other circles with me, one of my things that I like to do is call sellers every month and don't ask about the property at all. That's just being a regular person. I always say, I'm sure you'll call me when you're ready to sell the property, but for now, just seeing how you're doing, how's this going? I heard you were, last time you said you were going to do an upgrade. You need to take notes on all your phone conversations. If you're a real estate investor and you're thinking that you're going to scale up and all you're doing is banging the phones on RedX or something and not taking notes, you're going to be useless later. You need to take notes on every phone call so that the next phone call you can follow up with what you talked about on the last phone call. And unless you have a psychotic memory, you're not going to remember. You're not going to remember what John Smith told you 3 months ago. So you want to have that in your notes so you can pull it up in your CRM and then have an attachment to your last conversation. Number 4 is your caretaker letter. This is for older folks who know where they're going. Remember, off-market property acquisition, the first thing that you need to know is where are you going. Nothing else matters. The price doesn't matter. If the seller doesn't know where they're going next, you're not buying the house. You're not buying a house and just putting them out on the sidewalk and letting them figure it out. So your first and most important question that you need an answer to in off-market seller acquisition, where are you going next? And so if you're in a state like me in New Jersey and that person says, yep, we're going to Florida, we've already bought a house, that's like as ripe as it can be, you want to figure out what you're going to do. P.S. though, when you're dealing with the caretaker letter and you're dealing with older people, you're not always negotiating with the right person. Why is that? They're still alive. We're not talking about probate yet. Correct, but a lot of times younger heirs are looking forward to either that house or that investment, and they may be resistant to their grandparent selling the house that they wanted to move into with their new spouse. So it's something to keep in mind. Here's how the caretaker letter goes. This is for older sellers and people who've lived in the house for a long time who are very resistant to change. They'll say, I want to sell this, but I don't want anyone to ruin my house. Of course, people can do whatever they want, but there are some people who they've paid off their house a long time ago. They're not really concerned with how much they make. They don't know what to do with the money, but they know they're going to have to sell the house. So the caretaker letter is, we're going to take care of your home just the way that you did. We are going to upgrade it, but we're not going to take the character out. What we want to do is we want to be the conduit to the next level. We want to take what you've done in your home for 60 years and we want to transfer it to a new owner who's going to appreciate the home the same way. Doesn't that sound like something better than somebody gutting your whole house? And look, I don't know what's going to happen with that. Normally, I'm going to try to take that project on myself and do that and then invite them to the open house, which we have done before. Might they be a little bit sad when they see their house fully upgraded? I mean, yes, but we did not take the character away from the home. And again, to do these letters, you have to live up to them. You can't be fake. Please don't take my letters or my dialogues and then lie to people about it and do the caretaker and then blast their house or wholesale their house away to someone who's going to do it. That's just not the right thing to do. Can't control what you do. These are dialogues that anybody can use, but this is how I prefer to use them. So we've talked about the concerned citizen letter, the I want to be just like you letter, the neighborhood investor letter, the caretaker letter. And now let's get to two of the dirtier ones. These are more dialogues that I think you need to be aware of. It's probate and divorce. It's not fun. My dad was a probate lawyer, wills and trusts for many, many years. And I dealt with a lot of property intake on probate. We definitely looked at homes that were coming in through probate. So I know a lot about how heirs work, and it's complicated. So for anyone who hasn't heard this from me in the past, I'm going to give you my what happens when there's three heirs. And this describes probate to a T. Anyone who's done probate marketing will understand exactly what I'm about to say. Are you ready? If there's three heirs who own a house after somebody has passed away, this is what they want to do. The first heir is your best friend. Everybody loves them. All they want to do is just sell the house for cash to a reliable investor and then distribute the money between the three heirs, and they all go their own way. We love that person. They're the best. Can't be any better. They're going to give you a fair deal. They're going to take their money. They're going to split it. They're all going to go their own way. That's it. Number two heir is excited. They think they can flip their grandparents' house. They just don't have any money to do it. So they want you to come in and do the whole reno and then them benefit from it. And they're very, very sure that they can do that. Or they're going to do it themselves. These are a disaster, not fun, and that's going to be a hard negotiation. The hardest negotiation, though, comes with heir number three. Heir number three is the sibling who the other two don't like, and they want to live in the house and have the other siblings pay. It's the same thing every time. Three heirs, three opposing views. They never agree. I mean, I wish they would agree. That would be much better. I think it would help a lot if they would just say, hey, let's do number one. Let's just sell for cash right away. But it doesn't always work like that. So when you're dealing with probate, obviously you're dealing with death. So your dialogue needs to be softer. It's silly to me that people send probate lists quick for cash. I mean, first of all, if the property still needs to get probated, not much is going to go quick for cash. Might they want cash to make it easier? Sure. Depending on the quality of the home, might they also want cash just so they don't have to do anything? Sure. In my opinion, when you're working with probate, what you want to do is offer potential amenities. What we always do on off market is we tell every seller, no matter which one you're talking about there, is don't worry, whatever you don't want, just leave it in the house and we'll take care of it. We'll do the demo and the dumpstering for anybody at any time because we're going to clean out the house anyway. So it really doesn't matter if we're cleaning out a bunch of hoarder stuff or not. So that's more of something else that you can do. Then you're always going to get the objection. I have all these antiques. I don't know what to do with. It's no problem. We'll bring in an estate company and they'll work directly for you. We're not going to take any money. You can talk to the estate company. They'll sell off your nicest pieces, give you the money, and then you can just leave the rest. Those are already two ways that you're building a relationship to benefit someone and to help somebody who's just suffered a death in the family. It's much different than walking in on a probate or a death lead and saying like, hey, I'll buy your house for cash quickly, but it has to be today. Like, you don't think they're dealing with enough? One of their favorite aunts just passed away and you're trying to hardline them for some cash money. They don't even know how much it's worth. You're probably lying. I mean, let's be real. You have to be more mindful about your approach for probate and divorce. It's dicey. And probate, when you're dealing with death, is just, you have to figure out a win-win. And we use that word a lot, win-win or fair, because that's what we're looking for. And I think that's what's different. We're not trying to hardline anyone into giving us the property for, we want a good deal, but the difference between a good deal and a great deal is not a big deal to me. I'd like the best deal that I can get. I also like for someone to walk away happy. We aren't going to talk about pre-foreclosures and foreclosures today, but those are relevant in these dialogues as well. I will give you for that as a pro tip at the end. I wasn't going to, but I will after this one. The divorce letter is next. Let me just tell you the mistake that most off-market acquisition specialists make. They make the mistake of dealing with the divorce and talking to just one party. If you're talking to one party in a divorce situation, you're not getting the whole story. You're probably getting a quarter of the story because it's contentious sometimes. And even the nicest divorces, when you get down to like cutting up the house, One person usually wants to stay in the house, especially if they have children, to keep the continuity. One's going to leave, doesn't want to go live in a bad apartment, so they have to figure out how to get the money out of the house. Most of the times, the best bet is to sell it, split the money, both get smaller houses. Both people don't want to do that. So divorce is very tough. I've never done those as lead source. I don't like it. It just involves me being a psychologist, which I'm terrible at. And I don't really want to talk about that stuff. I'd like to talk about the property, how I can help, but divorce is just a little bit too much down the rabbit hole for me. Here's your pro tip at the end. This is for pre-foreclosures. The most important thing you have to know about pre-foreclosures and your approach to them is that they don't want to admit that there's been a lis pendens or they're in pre-foreclosure. Why? Everyone says, why? Why can't I just talk about it with them? Because they're embarrassed. Nobody wants to say, oh yeah, I've fallen behind on my mortgage payments and I'd like to sell you the house at a good deal. They don't want to leave the house. They also don't want to admit that it exists. So you'll get hard resistance on pre-foreclosure calls. Like, you're crazy. You don't know what you're talking about. You know, I'm current, especially if they answer in front of their partner and the partner doesn't know. That has happened as well. So just be very mindful when you're approaching in a pre-foreclosure or I'm behind on money situation that somebody is not going to want to admit that. Your approach needs to be much softer. Usually I would put it in the guise of, listen, I was doing a data run on properties where a lis pendens was filed at some point. I know that plenty of these are resolved right away. A lot of them are even mistakes. County records are terrible. But just in case there was a chance that these records are correct and at some point you fell behind, I am looking to help people out by buying houses that people are behind at a fair price. That's like the best approach you can do. I still think that it's off-putting to somebody who's behind, but that means your consistency there is going to pay off. You're going to make 5, 6, 7, contacts on that over time, and eventually they're going to tell you the truth. Because month over month, if they're still not paying, it just keeps getting worse and worse, and the bank keeps calling more and more, and they're going to have to start to avoid the short sale situation to start. So those are the 7 ones that I talked about. Gave you a bonus today. Concerned citizen letter, specifically for out-of-state owners. The I want to be just like you letter for local investors. The neighborhood investor letter for owners who own houses on or around your blocks. The caretaker letter for your older folks. Probate letter for the heirs. The divorce letter, it's a tough one. And then your pre-foreclosure opportunities. Those are the 7 options. I hope that these dialogues have been helpful. I'm Jonathan Green. I appreciate you listening to this podcast, Zen in the Art of Real Estate Investing. I created to focus on the mindful approach to real estate investing because I feel like there's just too much spam out there, too many courses offered for $50,000 that are completely useless. You can learn it all on podcasts for free. Go in the forums on Bigger Pockets, listen to these podcasts. You're going to be able to figure out more and then ask great questions. And a lot of us will always be willing to help you. This has been episode 12, a masterclass in off-market seller dialogues. Remember, before I hop off, if you like the podcast, it would really help if you shared it with your friends, left us a 5-star review wherever you listen to podcasts. If you're watching these on YouTube, it helps if you subscribe to the channel, hit the little bell. I don't know, whatever. We're not here to beg for anybody to do that. We don't want our friends and family to do it if they're never going to listen to the podcast. If this podcast, or if you're watching on YouTube, if this helps you in your real estate investing journey, do us a favor and just leave us that review. Appreciate it. See you next week.